have a slew of companies that we're speaking to over the next 1 hour, so stay tuned for that. We're starting off with Waaree Energies in focus. Amit Paithankar, whole-time director and CEO, with us this morning. Mr. Paithankar, thank you so much for your time here on NDTV Profit. Let's start by looking at your quarter, and a strong one. The order book has zoomed. Your revenues are up 2x, EBITDA up 4.2 times. Margins have pretty much doubled. What has really worked in this quarter? And of course, I'm looking at it year on year.
Oh, Tamanna, thank you very much for having us on the show here. Yes, it's been a good quarter for us. What has worked out in our favor, of course, is a very, very strong order book. The order book continues to be very strong. As you might have seen from our press release, we are at 50 crores of order book, which is pretty much a record for us. And this is a record quarter for us from the perspective of revenues, EBITDA, PAT, and all of that. What has worked is a very, very strong execution machinery that we have, which has delivered to customers on time, and a strong order book is being realized.
On this 50,000 crore order book, Mr. Paithankar, what is the execution timeline? Because you just talked about how execution has been core, right, and contributed to this quarter. What is the timeline that you're seeing on this?
It's a great question. So we have about, I would say, about 45% of the orders coming from India and the rest from the rest of the world. The gestation period of orders varies from something like literally a month, month and a half for retail orders, to all the way 18 months, 24 months, even beyond for some of the export orders. Some of the export orders that we have are actually for 2028. So 3 years out. So there's a big spread, but I would say if you were to plot a median, it will be somewhere in the region of, I would say, 9 to 12 months.
Wow. No, sorry, wait a minute. Are you saying you will execute this whole, let me get this correct, Amit. Good morning, Neeraj here.
Hi, Neeraj.
What is the, very well, thank you. What is the executable timeline you said for 50,000 crores of the order book?
So it's a spread, right? Like
exactly.
I said, the median will be somewhere around 9 to 12 months. But the spread is quite wide, all the way from 1 month, 2 months for the retail orders. So our business comprises of retail, it comprises of large utility orders from India, it comprises of export orders, right? In retail, the velocity of the business is very high. And so you will obviously see those businesses, booking and shipping happening very, very in close quarters, right? But for large utility scale orders, it needs a little more planning. So it takes about, I would say, anywhere between 9 to 12 months. And some of our export orders, especially in the US, are a little more long term. I mean, these are typically 1 year in advance. These are booked 1 year in advance, and therefore the gestation period is a little longer.
Got it. Okay, but since 45% is from India, so it includes those orders for sure. I was just trying to preempt or back calculate what's the kind of execution that you do in the next 12 months. But maybe I'll ask you that formally. What surprised me though, and maybe positively, I don't know if you see that as a surprise, but I don't think too many people were penciling in such strong margin upticks and so soon, right? It was believed that it will come in gradually, if at all. In fact, there was fears of whether the margins will come off because of all that's happening in the US on the cost front, etc., or the pricing front. What's led to this, and is this a new normal, Amit? What you've done in Q3?
Great question. Well, in terms of jump quarter on quarter, we are seeing a very, very healthy jump. That jump, whether it will be consistent over a large period of time, is something that we will have to keep observing. But the profitability levels that we are looking at, we pretty much be at this level or maybe even better as we move forward. And so, and let me deconstruct that a little bit. And you talked about US and a lot of discussions around US order book and so on and so forth. Number one, the US order book is extremely strong for us. There is no change in the past 1 month after the change in dispensation in the US as well. So that's an important factor to consider. And because of the gestation period, what happens is that our sales profile doesn't really mimic our orders profile, right? So that's if you see our sales profile, about 18 to 20% comes from the US market, and the rest is largely from the Indian marketplace. And so, therefore, we have many levers that we can play with for profitability. And that's something which we continuously discuss within the organization to ensure that our execution is on the dot, our profitability numbers are on the dot. It's all about executing, and it's all about keeping an eye on all these numbers as we move forward.
We want to welcome to the conversation Sonal Shrivastava as well, CFO of Waaree Energies, as we take this forward. Thank you for joining us, Sonal. Mr. Paithankar, I just want to follow up on your point. You're saying no difference from the US orders in the last month of the new dispensation taking over. Is it early days? What is the size of your US revenues or contribution of US revenues? Or US business to revenues, and when you have the new dispensation and President Trump saying make in America, tariffs on everything, how does that impact you?
The great question again, Tamanna. So once again, revenue contribution up until now for this entire fiscal 9 months has been in the region of 15 to 20% from the US business for us. We are uniquely placed, Tamanna, because we have a manufacturing facility in the US as well. So depending on the way in which US decides, if it's make in America, we do have a factory which is already up and running. We declared commercial operations on the 22nd of January of this year. And so we can play we have several levers in our hand to actually play this game well.
Sonal Shrivastava is with us as well, as we said, and Sonal, I mean, I was asking the same question to Amit as well about the really strong uptick in margins. Now, he's given his view that this is not necessarily a one-off, etc. I would love to know, one is, of course, what business factors bring in, other is what cost controls bring in, pricing brings in, etc. What's your sense about this performance and the outlook ahead?
No, thank you very much for having me, and a very good morning to all your viewers.
Thank you.
Our business is all about margin management. So, we look at all our sourcings very closely with our order book. So as soon as we have our order book, firm, we look at what all raw materials we can tie up quickly and therefore secure our margins. And this continues. And you will see in this quarter, we've almost got a 5% fillip on our raw material margins. So it's a constant endeavor. As far as cost control and other aspect is concerned, which is the manufacturing and other overheads, you will see they've grown because we are straddling growth. So year on year growth, 35% on the manufacturing side for the quarter, a big jump on other costs, but it's all growth planning, and it's kind of comes in line with the revenue top line growth as well. So we want to keep that momentum going into the coming months as well.
We are slightly pressed for time, so I'll ask one last question to Sonal here. But my request would be that because it's earnings season, it's a bunched up set of conversations. Sometime during the month of February or March, we would love to have the two of you again to try and understand in great detail what 2025 could hold in store. So I please take that request on board. But one last question, Sonal, to you, and that is around the fact that because you have a large global business or export business, and the dollar and the rupee equation, or the dollar and the global currency and rupee and global currency equation is the talk of town, right? How difficult is that situation to balance out? Is that something that could maybe become a point of concern at some point of time in the future?
So as far as, this hedging strategy and how we look at managing our dollars, it's very closely followed. What we do is we plan that on a month-on-month basis. We have a natural hedge with our export orders as well, and the profitability that goes with it. We also receive advances as we book new export orders. So I don't see that as a problem. Plus, we also have some orders which are dollar-linked. We tie in some prices which are a fixed basis. So all in all, it's a very much part of our cost strategy and managed on a live basis.
Okay. Okay, like I said, listen, we would have loved to talk for another 15 minutes, to be very honest. There's just so much to talk about Waaree, but slightly pressed for time today. Thank you so much, both of you. Congratulations on a fabulous quarter and all the best for the quarters ahead.
Thank you so much.
Thank you very much, Tamanna and Neeraj.
Well, the pleasure was entirely ours to have you.